Where do you find money to pay for senior care these days? In this video, I'm going to cover 11 ways that you can fund care for your parent or loved one. Some of these are easy and some are a little more complex, but I'm positive that at least one of them is going to work for your situation. Hi there, I'm Sophia and I'm bringing you new videos every Tuesday to help you be a more successful, more satisfied, and more informed family caregiver. If you like what you hear on this video today, please give this video a thumbs up. And if you don't want to miss any upcoming videos on everything senior and caregiver related, then please go ahead and hit that subscribe button. Do you need a break from caring for your parent, or does your parent now need a higher level of care than you can provide? Maybe you're considering moving your parent to an assisted living facility. Many family caregivers and seniors unfortunately don't get the help that they need because they say there's just no money to pay for it. Well, if you need respite or an assisted living or help in the home and you think there's no way to pay for care, you just might be surprised at the options that are available to you. Now, I'm going to start off by talking about some of the simpler options and getting a little more complex. The first way to find money for senior care is to rent out a room in your parents' home or even your own home and use that money for the personal care or adult daycare program that your parent might need. You could also rent out a room in exchange for some light caregiving or respite. What you'd need to do is to determine the fair market value for rent in your area and then decide how many hours of care or respite that your parent needs and what rate per hour a caregiver would be in your area, and then subtract that out from the rent. Let me show you an example. In this case, let's say that fair rent for a room in your area is $600 and the going rate is $13 an hour for a private caregiver in your area. And if you need respite or a break twice a week for 4 hours each day, that's 8 hours a week, or let's say 32 hours a month. This would equal $416 a month. What you would do is subtract that amount from the rent that's due, which would equal $184. And this is the amount that you'd collect from your renter/caregiver each month instead of $600. And this would be in exchange for 4 hours of care for your parent twice a week. You should speak to your accountant about this arrangement. The $600 a month would still be considered income that you would need to pay taxes on, and you're legally obligated to pay for taxes for your employee. So the extra $184 that you get should be saved every month to offset your tax requirements. Now, if your parent owns their home, another option is to just rent the whole house out and use that money monthly to help move them to an assisted living facility if that's the level of care that your parents need. Another option, if your parent owns their home, is to sell the home and to downsize to a smaller home or even to an apartment and use the leftover money for a caregiver, adult day health care, or you can use that money from the sale of the home to move your parent into an assisted living facility. Now, if your parent is a veteran, then consider looking into the VA's Aid and Attendant program to pay for long-term care or respite. The Aid and Attendant program is a VA pension for qualifying veterans, and this money can be used for care and respite or assisted living. The program might pay up to $1,880 a month for a single veteran or up to $1,200 a month for a surviving spouse, or for a married veteran couple up to $2,230 for care. Now, the application process is a long one, but it's definitely worth looking into. The Veterans Administration also has a program called the Geriatric and Extended Care Program. Now, this is different from the Aid and Attendant Care Program. As part of the VA standard benefit package under the Extended Care Program, your parent might be eligible for in-home personal care, for adult daycare or up to 30 days of respite a year. So I'll put links to both of these VA programs in the description below. A Viatical Settlement is another way to fund senior care. You can sell your life insurance policy to a third party for a percent of the face value, and that money can be used now. To be eligible, the policyholder needs to be terminally ill with a life expectancy of 2 years or less, or they need to require assistance with at least 2 activities of daily living, such as showering or toileting or ambulating, which most of your parents, I'm sure, require help with that. When the policy owner is not terminally ill but requires assistance with care, then they refer to the program as a life benefit. The benefits of the Viatical and life benefit settlement is that you no longer need to pay your premium on the policy and that you no longer have any responsibility for that policy. The downside, however, is that your beneficiaries would no longer receive benefits after you die. Also, for those with a life insurance policy is the accelerated death benefit. Many life insurance policies have an accelerated death benefit rider attached to them. This allows the policyholder to take a cash advance against the death benefit if they have a terminal condition and are expected to live less than 2 years. Some policies can also be triggered if the policy owner requires assistance with activities of daily living, such as bathing and toileting. So it's worth a call to ask about this, especially because not all policies specifically list the accelerated death benefit right on the policy, so you have to call and ask if it's available. You may also be able to add the accelerated death benefit to an existing policy even if you don't have it, so it's worth a call to find out if that's an option. You'd still need to make payments on the policy and keep it in good standing, but the money that's advanced now doesn't need to be paid back, and it is just deducted from the face value of the policy. A reverse mortgage is the next option for funding senior care. If your parent owns a home and has sufficient equity in it, then a reverse mortgage might allow them to take out some of their equity and use that money now. They can get a lump sum or they can get monthly payments. The money can be used for anything, including personal care or adult day health care. The great thing is that no payments are required now, and all the money taken out will be added to the amount owed on the home loan and will need to be paid back once the home is sold in the future. Some of the rules are that everyone that's living in the home must be 62 years old or older, and they must stay living in the home. The good thing is that any equity that's not used within the reverse mortgage can still go to the beneficiaries when the home sells in the future. But do remember that this is a mortgage and your parent will still need to go through the lending process and pay all of the associated fees. But those fees don't need to be paid now. They'll just be added on to the amount that is owed on the loan. If you want to find a reverse mortgage in your area, then I'll put a link below. A less known way to use your home to get money is the HomeOwner Agreement. This is a program where a company can give you up to 17.5% of your home's current value in cash to be used for anything. And this is 17.5% of the value, not the current equity. There is no debt, there's no interest, no payments. The way that the company makes their money is by taking a percent of the change in market value of the property years later when it sells. So they're counting on your home's value going up. If the value goes down, then they share in the loss too. The good part is that you maintain 100% ownership of the home. The company is more like a co-investor in your home, and they're banking on it gaining value over the years. The program that I found that offers this partnership is called Unison HomeOwner Program, and I'll put a link to their program below. For all of these programs that I've mentioned, Make sure that you're aware that getting cash from any of these programs could affect their ability to qualify for Medicaid. But if they don't qualify for any of those, if your parent has some assets, they could use that money and spend it down on personal care, adult daycare, and spend down their assets until they qualify for Medicaid. Then, once they're on Medicaid, they'd be eligible for several programs that could help. Once qualified, they could apply for in-home supportive services if it's available in your area. This is a program that pays for a caregiver to come into the home, and the county would pay for it for Medicaid recipients. Many states also have a Medicaid waiver program for assisted living facilities, and Medicaid may also pay for adult day health care in your area. And of course, Medicaid will pay for long-term nursing care in every state if your parent ever needs that level of care. So you see, there are many ways to find money to pay for senior care and respite. You just have to be a little creative. If you found another way that's creative to fund your seniors' care, then share it below and help others. Thanks for watching this video today, and if you found it helpful or informative in any way, then please hit the like button, and if you don't want to miss any upcoming videos, then please subscribe to my channel. Thanks so much for watching, and I'll see you next time.